Good afternoon, everybody, and welcome to today's financial education webinar on auto buying made easy. My name is Vincent Delgado. I'm the education outreach manager here at Cesslock Credit Union. Before I introduce our awesome guest of honor this afternoon, I did want to take care of a couple housekeeping items. We are recording today's webinar. And so after today's presentation, you will receive a link to the recording. So if you do have to jump off early, if you do want to share today's webinar with any friends, family, those who might be interested in the topic, again, just confirming you will receive a link to the recording for you to revisit or pass along. We also encourage any and all questions throughout the presentation today. We're definitely going to have some time at the end to ask myself and our guest Javier some questions, and we actually, really encourage that. But if something does come up through the webinar, you don't want to forget the question that you have, feel free to just drop it in that chat box or Q&A box. I can't remember what it might look like on your end. For me, it looks like it says chat box and it's at the very top of my screen. For you, it might look a little different, but again, highly encourage you to ask any and all questions throughout the webinar, or hold on to it and we'll make sure that we get to those questions at the very end. A little bit about Cesslock. We are the county's largest locally owned financial institution. We've been around for a little over 80 years. Our members are local, our money stays local, and we're very, very happy, honored to be able to serve the Central Coast. We offer these monthly financial education webinars, so please continue to keep an eye out for upcoming presentations. We're gonna have a great one in September next month on kind of getting out on your own, maybe geared towards that younger, late teen, early 20 age range, about stepping out on your own financial independence. So if you have anybody in your life or in your family that fits that age range, highly encourage them to attend that presentation in September. So with that being said, I do want to give us an opportunity to introduce our awesome guest that we have today. His name is Javier. He's our program manager for indirect lending here at Cesslock. Javier, do you want to say hi to everybody, introduce yourself, and maybe tell them a little bit about your background here at Cesslock?
Yes. Hello, everyone. My name is Javier. Just like Ben said, I am the program manager here with indirect lending. I work with the dealerships here in the Central Coast, from Paso Robles all the way down to Bilton right now. And I work through the program is called CUDO, so it's Credit Union Direct Lending. Allows the dealerships, for our members to go and buy a car and do everything through the dealership, and they send us all the documents, and we're able to do everything for them, via that system there. I've been with Cesslock for 5 years now. First 2 years I was a mortgage loan officer, and then transitioned into my current position I am in now. And also I underwrite deals as well. So I don't only just go out there and visit dealerships, make sure the relationship is good, talk to them about our program. And then I also, when I'm in the office, I underwrite and look at deals as well. So thank you for being here.
Yeah, thank you so much for joining us. And again, it's great to have Javier here because he does work with those dealerships. He has a lot of understanding on, maybe the current market, what he's seeing at dealerships, maybe some tips and tricks that he can share because he is working so closely with them. His wealth of knowledge is definitely going to be appreciated as we go during this presentation. I did want to set the stage a little bit and kind of discuss a little bit about the current market as it relates to auto buying and making a purchase. The average new car buyer in June of 2024 paid just under $49,000, about $48,644. That's $307 lower than June in 2023. So a slight decrease. Again, and all of this information I'm about to share is from Kelley Blue Book. I just wanted to make sure I cited the source. While new vehicle prices are slightly coming down, emphasis on slightly, costs are still up, especially with those insurance premiums. I'm sure everybody here on the call can attest, but I know my car insurance went up this last cycle about 4 or 5 months ago. Not something I enjoy seeing, but definitely something I noticed it went up. And those are for someone, again, speaking for myself, haven't had a ticket or an accident in many years, really clean driving record, and that insurance still went up. And so I'm sure, most everybody on the call here can agree theirs probably did as well too. The Fed's once said it hoped to cut rates several times early this year. It's now predicting just one cut no earlier than September. Car shoppers can expect the second half of 2024 to look a little bit better, since maybe the interest rate cut will happen, helping with some affordability. And easing inflation could, relieve car buyers if the Fed does lower those rates. So I think it's just something worth noting on what to expect, or at least what a snapshot of the current auto buying market looks like. What to expect during today's presentation to kind of help set the stage. We're going to be talking about setting your budget when you go to purchase that vehicle, what a loan versus lease is, and maybe some insider information as it relates to those two items, different types of vehicle, maybe one that you're identifying, new versus used. It's always a good conversation to be had. Financing and costs, what that kind of looks like, tips when you're at the dealership. And then again, as always, a question and answer with Javier for those questions that do come up. But again, emphasizing, feel free to ask throughout the presentation, regardless of what topic we are on. So with that being said, let's dive in here to talking about our budget. So I mentioned, the good news is that prices, for new and used, have been in a slow, steady decline for most of the year. But regardless, whether prices are increasing or decreasing, setting your budget is probably the most important thing when you begin to look at making an auto purchase. We all want the leather interior and all the fancy bells and whistles, but it's incredibly important that we begin to identify, our budget and how we're going to be able to afford to pay that. You want to decide how much you're willing to spend. You're going to want to decide if you want new versus used. And hopefully, we'll help make that decision for you easier. And when you begin to take a look at your budget, that decision should come a little bit easier on what you can afford. First things first, you want to take a look at your income. It's estimated that about 10 to 15% of your income should be spent on transportation, including your car payment, your insurance, fuel, things of that nature. So for example, if your take-home pay is $4,000 per month, the actual money that hits your bank account, not your gross, but your net, then you're going to spend about $400 to $600 on transportation per month. Again, that's including your car payment, your insurance, and your fuel. That's kind of the ideal range you really want to be in when you start to set that budget. Understanding that everybody's situation is a little different. Maybe you can afford to have your transportation costs be a little bit more than 15%. Maybe you're not dealing with a mortgage right now. Maybe you're not having to pay rent because of your specific financial situation. So you have a little bit more money to allocate to an auto purchase. But again, everybody's situation is different. I'm only giving this example for folks that maybe have a mortgage, have other expenses. You want to keep that into between the 10 to 15% range. You really want to identify your credit score. Your credit score is going to have a huge impact on what your budget is going to look like for that purchase. Knowing your score before you step foot in a dealership is going to help you understand how much you can afford to pay. Your interest rate on your vehicle is really going to depend on that credit score. The higher the score, maybe means the lower the interest rate, lower monthly payments, less money spent over the life of the loan, and less money spent month to month. We see those commercials. You can qualify for X or Y interest rate. Those commercials typically depend on what your credit score is going to look like. So have a good understanding of what your credit score is before you even begin that auto buying process. Javier, quick question for you. When looking at a purchase and you see those commercials for like, oh, you qualify for the lowest interest rate, whatever that might be, what's that credit score threshold like that dealerships or lenders are like, yeah, you're going to be able to qualify for this low amount? What's that credit score threshold? What amount are they looking for?
Usually the credit score threshold is usually like an A plus, which is range from about 680 to 750. Being the highest, that's usually what those kind of promotional rates are usually the people that have those type of credit scores fall into that.
Gotcha. Yeah, and that's also kind of what I've heard as well too. That 670, 680 and above is that range you want to be at in order to qualify for some of those, those good interest rates, or at least, potentially the lowest interest rate that they'll offer, is that 670 range. So make sure that, before you begin this auto buying process, you take a look at what your credit score is going to look like, because that's going to dramatically impact the cost, what you're paying per month, what you're paying over the life of the loan. If your credit score isn't at that range, take a look at ways in which you can improve it. Is that decreasing some balances? Is that taking care of maybe some past due bills that you have? Make sure that you're making your payments on time. Make sure that you're keeping those balances as low as you can. A couple months ago, we had a presentation on decreasing debt and strategies to do that. If you're someone in the audience that is struggling with maybe those credit card balances and your score is reflecting that, send me your email and I'll make sure I pass that presentation along to you. Because again, we really want to make sure that before you're starting this auto buying process or this home loan buying process, whatever it might be, that your credit score is at the best it can be in order to save you money over the course of that loan and over the course of those loan payments. Another thing that's going to really impact your budget is are you putting money down? Are you trading in a vehicle? Those are things that can really impact, again, the amount of that loan and what you're going to pay month to month. So really factor that in. I know that there are a lot of great auto loan calculators out there. Regardless of the financial institution you belong to, they traditionally have an auto buying calculator on their website. There's great publications out there like NerdWallet, even Kelley Blue Book. They may have an auto loan calculator out there as well too. And so it allows you to input, maybe the trade-in value for a vehicle. It allows you to input how much money you might be putting down. And it allows you to maybe factor in your credit score and the interest rate. And it really helps paint a clear picture as to what your monthly payment is going to be. So I highly encourage you to take advantage of some of those auto loan calculators that are out there. All righty. Any questions on setting the budget? Again, it's a really good place to start. Before you even step foot in that dealership, you want to have a good understanding as to what you can afford to pay. You don't ever want to find yourself in a situation where you're at the dealership or you're talking with your lender and you overcommit to what you can afford to pay month to month. People's financial situations change, or they're not always the same month to month. So it's really important that you have a good understanding and a firm grasp of what you're comfortably able to afford on a month-to-month basis for your purchase. All right, let's talk a little bit here about leasing versus loaning. There's always, let me see, we have a question here. All right, we got a question. What percentage is good amount to put down on a purchase? Javier, do you have an answer for that? I don't know if there's necessarily a right or wrong answer. But you want to take a stab at it first, Javier?
Yeah, I think you're right, Vince. There's really no good percentage to that we recommend or that's out there. It's just going to be kind of sometimes depending on your credit, the dealer will ask for a down payment because the lender might require you to put more down. So in that case, it's just going to be whatever they say. But there is really no other specific percentage that you should be putting down.
Yeah, it's a little different than, like the housing purchase where, if you don't put 20%, you might be dealing with private mortgage insurance. Like there's not those hard and fast rules with the vehicle. Yeah, so I mean, any amount you put down can help decrease your costs month to month and of course over the life of the loan. But yeah, to kind of echo Javier's point, there's not necessarily a right or wrong answer. It really just kind of depends on the situation. Good question though. Let's talk about a lease versus a loan. The choice between buying and leasing your car is often a tough call. There's a lot of people out there that A, don't necessarily know the difference, or B, don't know which route they want to go. On one hand, buying could potentially involve higher monthly costs, but you own the vehicle, which is great at the end, and once you're done paying off that loan, the vehicle is yours. You can keep it. You don't have that car payment anymore, which as someone who has one car that's paid off and one car that's not paid off, it is great to not have two car payments. On the other hand, the lease has some friendly or I should say has some pros to it as well too. You don't necessarily take the big depreciation when you buy the vehicle as you do with a lease. But the con to that is maybe you're in this kind of endless cycle of always having a car payment. So, it really just depends on your given situation, which may work for you. So really quick as just kind of a recap of what a loan versus a lease is, and we'll dive a little bit deeper here on this next slide, the major differences. With a lease, buyers make a monthly payment to drive a new car for a set term. We'll talk a little bit on the next slide about what those terms might look like. But oftentimes that payment may be less than financing a new vehicle. But at the end of that term lease, you have to return that vehicle. A loan, you're buying the vehicle with a conventional car loan from a lender, and it's pretty straightforward. You make that purchase, you take out a loan to buy that vehicle, and you're paying that loan back. You borrow the money from, again, a credit union, a bank, or another lending institution, and you make those monthly payments for a set number of years. So for those that were maybe uncertain or unclear on what the difference is between leasing a vehicle and loaning a vehicle, hopefully we've kind of covered that and answered your question right here on this slide. Let's dive a little deeper right here on the major differences between loaning versus leasing. And I'm not going to recap every single word on here because it's obviously a lot, but we've talked about ownership. When you take out a loan to buy a vehicle, the car is yours. If you're leasing the vehicle, the car is not yours. You're giving it back at the end of your lease. If you have a loan to go purchase a vehicle, you can sell in or trade in your vehicle at any time. If you have a lease and you break those lease terms early, you may be stuck with some additional costs. So something to think about as well too. Mileage is a big thing. When you purchase your vehicle and you take out a loan to buy your vehicle, you can drive as many miles as you want. Obviously the higher mileage on a car, it decreases the vehicle's trade-in value or resale value. With a lease, a lot of lease terms have mileage limits. Sometimes it's 10,000, sometimes it's 12,000 per year. So someone that drives a lot or has a lot longer commutes, that lease may present some challenges. If you do go over those miles in your lease year, you may have to pay extra for some of those miles that you went over. Javier, is there anything more you want to expand on when it comes to loan versus lease? I know a question that may come up, given current, interest rates, is there even a value in one better than the other? Again, anything you want to expand on as it relates to loan versus leasing?
I think during, when the pandemic was happening, leases were less common. They were basically, most people usually want to lease because it gives them a lower monthly payment. During the pandemic, that wasn't the case. They were basically the same. So leases weren't so popular back then. Now they're getting a little more popular. On leases, you might want to check too, because sometimes, again, when the car shortage was happening, when the leases were coming up, the dealerships were just taking the cars. They weren't giving the option to some of the members to buy them. Like before, at least you had the option to buy it or trade it in.
Yeah.
So for a while they were saying, no, we're just taking it back. So that was something to check. Now I don't think it is, but it's good to maybe just ask. Say, do I still have the option to buy it if I want to keep it or not? So maybe just that.
Gotcha. Can you expand a little bit on when you're leasing a vehicle, is there still a requirement to put a down payment or put money up front for a lease?
That depends on the dealership. Sometimes they do require you to put a down payment. Depending on how or what type of vehicles they're trying to get rid of. If they have maybe a high inventory on some, they might just say no money down, but most leases do require some type of down. to put down when you're leasing a vehicle.
Gotcha. Okay. And then another question, can you confirm leases in like the traditional lease term? Is it 2 years? Is it 3 years? What is like an average lease
Usually
term?
it's 36 months is the term
Okay.
that usually leases are for.
Awesome. Okay, cool. Yeah, so let me see. It looks like we may have a question here. If leasing, how does buyback amount look for value of car? Let me see if I can understand this question. If leasing, how does buyback amount, I think is what this person's trying to ask, look for value of car? So I think the question is if you're leasing, and how do they factor in maybe the value of the car when you're maybe if you can expand on that question, I might be having trouble understanding what you're trying to ask here.
I, I,
Um,
I think what they
Go
mean is
ahead.
like if you're gonna at the end, if you want to buy your car, well, how do they get the value? That's what I'm thinking that
Gotcha. Okay.
Anna's probably asking. Um, if I'm right.
Yeah, I think you might be right. Yeah, because if at the end of the lease, you kind of touched on it, you do have, okay, there you go. Yeah, you do have an option to buy it back. So what does that look like?
So they have different different formulas that they use. Mileage is a big one that they use to calculate the value, the condition of the vehicle. So they'll, inspect it. And based off that, they'll kind of figure out a value to give you. There were some times where you were able to, you can say, hey, call them up and say, hey, if I traded my car, what's the value of it? Or if you're leasing it, they'll be able to give you kind of a value. And then I've had actually friends that have leased and actually sold a vehicle and made money off of it. They weren't driving it as much. So yeah, it's just kind of there's no I don't know the actual formula, but it's basically they look at the miles, the condition of the vehicle, and the type of vehicle it is, and then they kind of figure out a value based off that.
Yeah, it's so funny you mentioned the lease and making money off of it. So that happened to my wife and I. We had a vehicle that we leased pre-pandemic. Pandemic hit, um, shortage of inventory and cars and everything. The value of the vehicle went up, and we sold the vehicle from the lease and made money off of it actually. Um, so yeah, the example you just made is something that, or the example you just shared is something that happened to us as well too. Um, yeah, just wanted to share that bit. Great questions. Thank you for asking that. Let's dive again here into the next slide and talk about the right vehicle. We talked a little bit about the very beginning, selecting the right vehicle for your budget. It's also important you select the right vehicle for your day-to-day needs. It's going to take some thought, and at the end of the day, it's really going to take some honesty and transparency from yourself and whoever you might be sharing the vehicle with. Small sports car or compact vehicle may work great for, a single person or a couple with no kids, but when you have a family and you start or thinking about starting a family, a smaller sports car may not be ideal. A large SUV is great, for camping and road tripping, but when it's time to fill that gas tank up or find street parking or whatnot, a large SUV can present some challenges. So it's incredibly important that you do not only your research up front about what car is going to fit your perfect needs, but you ask yourself some important questions, like how long your commute's going to look like. Do you have kids? Do you always have cargo? Do you have pets? Do you have animals? Asking yourself some of these questions is really going to dictate which vehicle works best for you. You really want to do this because you want to be in a position where you avoid overbuying, you avoid overcommitting to a purchase, not just financially, but personally, that can present some challenges. Really getting a vehicle that fits your needs is going to help you in the long run. I think the great thing with today's technology is before you buy anything, whether it's um, you know a a set of pillows to a vehicle. Like we have so many resources at our hands, things like, Car and Driver or Edmunds or Kelly Blue Book or, you name it, you can do these reviews. I feel like before we bought our most recent vehicle, I lost count of how many YouTube videos we watched on reviewing a specific type of vehicle. And so, take the time, take a few hours to watch some of these videos, read some of these articles, and really identify what car is going to be best for your needs, for a family of two or a family of four, or pets and animals, you name it. We have all these resources available to us, and start having those conversations about which vehicle is going to be right for you. Factor in things like gas. Factor in things like if you're going for an electric vehicle, what does charging look like for you? Do you have the ability to charge at home? Do you have solar? If you're constantly on road trips and you need to rely on Tesla charging or other public, EV charging, like is that something that fits your situation? You really have to ask yourself some of these questions and have these conversations and do some of your own research ahead of time, if you're looking to find that right vehicle. Let's talk a little bit here about needs, or about new versus used. I'm sorry. If you couldn't already tell, there are a lot of questions that obviously, go involved into the car buying process, and a lot of it is questions you have to ask yourself. But one of the more important ones is going that new versus used route. Again, very similar to loan versus lease. I'm not necessarily going to read through every single one of these, but there are some major pros and cons to going new versus used. Obviously, if you're buying new, there's no wear and tear on the car. Your purchase typically has very, very few miles on it when it's new. And you can almost all but, guarantee that you're going to have a car that has zero wear and tear on it. There's also some really good warranties that come with new vehicles, whether that's a dealership warranty or a manufacturer's warranty. You have the luxury of having those warranties in case something does happen. New car, you have all the latest new technology. What was advanced 10 years ago is now standard. And I'll always tell this story. I bought a Honda in 2000 and when was that? 10 maybe 10 or 11. I bought a Honda Civic, and I was like blown away. Like, what do you mean there's a rear view camera on this and there's Bluetooth in the car? Like hands-free, connect to Bluetooth and playing music. To me at the time, that technology was so advanced. And nowadays, like a backup camera is so standard in almost every single car. So again, it just speaks to that technology advancement. And then, new cars sometimes tend to be more fuel efficient, depending on the vehicle. Even bigger SUVs at times can be a little bit more fuel efficient now than they were, 10 or 15 years ago. The drawbacks to going, new car, you're taking the depreciation on that vehicle. Javier, I feel like I always misquote the stat. Is it something like the second you drive off the lot, it loses 15 or 20% of its value? Can you confirm what that statistic is?
Yeah, I think that is correct.
Yeah.
Right
The
off, yeah, as
second
soon as you drive it off.
Yeah, second you drive off that lot, it drops in value like 15% or something like that. And you take on that hit when you buy new. When you buy used, you're not taking that depreciation. Somebody else already has. So obviously it's a less expensive of a vehicle, which is appealing. Used cars provide probably more value for the dollar. If you're buying new, again, you might be overpaying a little bit, whereas used, you're kind of getting it for the specific value of the car. Sometimes used cars can mean, maybe some lower insurance rates or no hidden fees at the dealership. You're not taking on some of those other fees that are happening at the dealership. So there's definitely pros and cons to each of new versus used. Anything else you want to expand on new versus used, Javier?
No, I think you hit everything on there, so.
Righty. We've got a couple more slides here, and then we'll dive into some Q&A if we have any. Let's talk a little bit about financing. Financing a car can seem a little bit overwhelming, especially for some first-time car buyers out there or folks that haven't made a car purchase in a while. Buying a vehicle is a huge purchase. It's one of the bigger ones you're probably going to make aside from buying a house. There are three major factors really to consider when you're thinking of taking out a loan or financing a car. The first one is really what that loan amount is, total amount you're going to be borrowing, what that interest rate's going to be, the annual percentage rate, and kind of the length of that loan term. Those are huge factors to consider when you're going to be financing a vehicle. It's common for car buyers to maybe put off the thought of financing until they're kind of at the dealership's finance office. And unfortunately, that might be a path towards paying a little too much for the car loan and putting yourself in a difficult financial situation. So it's incredibly important, that as we've talked about, how much vehicle you can afford and really have a plan in place to finance your new vehicle before you even think of heading to the dealership. So Javier, do you want to talk a little bit about, I don't know sorry about that. Javier, do you want to talk a little bit about, getting pre-approved and what that process can look like? I know you can probably only speak to it from a CESLOC point of view, but just in general, what that pre-approval can look like before you even get to the dealership.
Yes, getting pre-approved is, you go into you can either do it like with CESLOC, you can go into the branch and sit with one of our MSRs here, and they'll be able to discuss, they'll ask you income information, they'll check your credit, and then based off all that, they'll be able to kind of say, okay, based off this is kind of the amount that we're be looking at. So you have a loan amount in mind, and then you also have like a payment in mind, kind of what you feel comfortable with and what you can afford. Having that when you go in is huge, just because you already have an idea kind of what kind of car you want, the amount. MSR is like our bankers, basically. Member Service Representative is what MSR stands for, sorry. So they go in and so when you go into the dealership, you already have we give you a letter that says you're pre-approved for, so let's say for $20,000 or something. And then now like, hey, I can afford a $20,000 car, and then instead of them trying to show you a $50,000 car, which you won't even be able to qualify for. So that helps with that. And it just also lets the dealer know that you're serious. And you also, because they're probably going to want to run their credit, run the application for you anyways. So that's something too that they'll probably say, hey, we need you to apply to get the car. You can say, well, I'm already pre-approved through my lender, so that way they don't have to check your credit again. So it kind of makes that a little bit easier sometimes. So the only thing is when you do get pre-approved and you're going to go through CUDL, which I talked earlier, the credit union direct lending, they still have to run your application again, just because they send us an electronic application through the system. So just so you know, when that happens, it's okay if they do that, because that's how we process your loan for you. But yeah, getting pre-approved it does help tremendously versus just walking in not knowing anything when you walk into a dealership.
Awesome. Thank you. We've got a couple of questions that came up. Can you talk a little bit about gap coverage? Is it needed? Pros and cons to what gap coverage is?
Yeah, so gap coverage is basically when you have a vehicle and you owe, say, $15,000 on it, and then you're in an accident, your vehicle gets totaled, and then when they appraise it, the insurance appraise it, it's only worth now 12. So now you're a deficit of $3,000. So if you don't have gap coverage, then you owe that, the insurance will pay off the 12, and then you'll be responsible for the 3 that's left over. So the gap coverage basically will cover that difference there and pay it off for you, so you don't have to come out of pocket with anything. So that's, so that does come in handy. Just also with gap coverage, there's a lot of different coverages. So make sure you understand yours, because some of them will cover you only a certain percentage, not the whole vehicle or not the whole value or what you owe. So sometimes, people are like, well, I have gap and I still paid, an extra $2,000. That's because your gap, your gap policy did not cover it all. So just make sure you understand the coverage, how much your gap coverage is covering you. And it's usually pretty inexpensive compared to like a mechanical breakdown insurance. So it's usually pretty, I always say, if you can afford to add it because it will, especially like on new vehicles, since once you drive off the lot, your vehicle value is dropping, pretty a lot. So that's kind of how gap insurance works.
Gotcha. We've got a couple questions in the queue, and I'll make sure we get to those, but I did want to get through the slides first. So I haven't forgot about these questions in the queue, folks. Let's get through the next slide or two, and then I'll make sure we get to those questions. One of the last slides here, let's talk about at the dealership. And some of these are just, kind of some general tips. And Javier, again, you might be able to speak a little bit further about this, and maybe even if some of these are just, I don't want to say lies, but like, if it's just a common misconception. But I know that, from what I've gathered or from what I've heard when you're doing the auto buying process, maybe visiting during a weekday, especially if you're not in a huge rush. On the weekends, obviously, is when most people are trying to purchase a vehicle. So a salesperson may be a little bit more pushy. They may not give you the time of day. They may not give you the full attention. And so if you're going during a weekday when it's a little bit less crowded, you'll have more of an opportunity to begin having conversations with salespeople or people at the dealership to get a lot of the questions that you may have answered that, again, if you go on a weekend with the family or you're there and there's other people there with families, it can be a little chaotic, and they may be able to give you a little bit more of attention during the weekday. Test drives. Test drives are huge. Nowadays, everybody, nowadays you can make a purchase with a car online through Carvana or whatever, and people are skipping the important part of the test drive. Again, when we were doing our purchase a few years back pre-pandemic, we really fell in love with two cars. We did all the research. We still really loved these cars, and we did the test drive. And right away, we knew when we were in the vehicle, we really wanted, and it was a Subaru at the time instead of, I think, the Mazda, just based off of the test drive and how we felt in the vehicle. And it was incredibly important. So make sure you're not skipping that step. Holidays have great deals. I just saw a graphic, and I think it talked about some of the better holidays to make a vehicle purchase, and it listed it in tiers. The upcoming holiday, I believe it's Labor Day, right? I always mix up Labor Day, Memorial Day, but this was in the second tier, like below the first one, which was, I think, Memorial Day and even during the holidays, because of all the deals that you constantly see at dealerships. So holidays, are a great time to get a good deal on a vehicle. Don't count on the salesperson to volunteer deals on the vehicle. They may not be forthright or truthful or whatever. So just kind of make sure that you're doing your research on what deals or what perks are available to you. And kind of take the initiative on asking further questions about that. And also understand what you can or can't negotiate. Obviously, there's a lot of either taxes or fees at the purchase that you can't negotiate. But there may be things that you can, like, warranties and whatnot. So, make sure you're understanding what you can and can't negotiate. Anything as it relates to this slide, Javier, that you want to maybe debunk or emphasizing any further?
No, I think the last part is actually kind of important, to just know what you can negotiate and what you can't. I think will help you when you're, negotiating the deal on your vehicle. So, and and then also, like, when you visit, like, I think you were right on where you said, like, if you go on a weekend, they're not going to spend as much time with you and talk to you about the vehicle versus, they're just trying to sell it to you and get you out of there, go to the next person. So I think that's also a good tip.
Awesome. So we have one slide here, and it's really just kind of summary. It's just, the auto buying process, while it seems overwhelming, can really be easy. It's just really you doing some of your research up front on what your budget is, what type of vehicle you really want, and what's going to work for you. And then, as Javier mentioned at the very end, like understanding what you can or can't negotiate to get the deal that you want. You know, it's obviously a major purchase, as we talked about. You know, you don't want to have, you know, we always have buyer's remorse or that guilt at times with certain purchases. You don't want that with a purchase this big. So make sure you're doing some preparation up front and doing some of that research. Don't hesitate to reach out to Cesslock to ask any questions, whether you're visiting your local branch or, you know, shared Javier's email at the very beginning, and we can drop it in here if you need to. But don't hesitate to reach out with any further questions. We're really here to help make that process easy. Now let's make sure we have some time to answer any questions. There are a few that are in here that I want to make sure we get to. There's a question here regarding credit. Does running credit twice for same vehicle purchase affect your credit score? So when you're going to apply for an auto loan, they are going to run your credit. And those are traditionally a hard pull, which is or a hard inquiry, which is going to affect your credit. Yes. So you know, we've heard horror stories about people going through the auto buying process and they get their credit run, you know, a handful of times, and that can be damaging to your score. So I guess the short answer is yeah, getting a credit check for a purchase multiple times is definitely going to affect your credit score. I think that's the question you're asking. Another one here. Can you give a detail on what you can negotiate or can't negotiate, Javier? Like more details, I think further here
Yeah.
it says like, are they willing to negotiate the purchase price? Should I expect to pay sticker price? Can you expand a little bit more on maybe things that you can negotiate on?
So when you go to the dealer, I mean, you know, before price was not basically when during the pandemic, it was not you can't negotiate that because there was, you know, such shortage of cars that if you didn't pay that amount, the next person behind you would. So now I mean, they're still not pre-pandemic. The stock is not, you know, what it used to be, but it's actually gotten better. A lot of them before were having, so they'll have MSRP plus, you know, so they're adding anywhere from like 5 to 10,000 on the autos because, you know, they were so short. Now most dealers do not have that. If they do have that, you can probably find one that does not have it. MSRP, they're still kind of sticking to that. I mean, you can always negotiate that. That's always something that, you know, you can negotiate because it's always been an option. But sometimes they're going to try to push you, say, oh, well, you know, there's not that many vehicles. So just know that they will give you pushback on that, but that is something you can negotiate as well. Warranties is definitely one that you can negotiate. The first price they throw at you is going to be the highest and they're hoping it sticks. So you can always negotiate, go down. And even like say it's 100,000 miles at 10 years, usually it's like the, you know, the main one that they always try to sell you because it's the most expensive one. And then you say no, then they'll go, okay, what about, you know, 50,000, 5 years? And they might, you know, that seems lower, but you could probably get that 100,000 mile for 10 years for about the same price that they're offering you, that 50,000 for 5 years. So just negotiate that, knowing that they do have different prices that they can go down on those. So that's on the warranties. The gaps usually as well, you can negotiate on that. With them is, you know, because that's along with the warranties. What else can you negotiate? Sometimes they can throw a service contract in there, which falls under warranty. So like, you know, oil changes, stuff like that. Most dealers now will include they call it a clear coat or paint protection. They usually always put that on there. Most of the time you can't negotiate that because it's already on the vehicle. So sometimes when you try to say, hey, I don't want that, you know, they're gonna say, well, it's already, you know, we already sprayed it or whatever they do to put on the vehicle. So some dealerships will automatically include some of those extra add-ons. Some of them don't. So just make sure, like say for instance, just as an example, you go to Toyota and they offer, you know, they say, okay, this is a standard feature that, you know, that it's included and it's an actual add-on. which, maybe the one here in Slow will do it and maybe the one in Santa Maria doesn't. So you can always check on that and see which ones do and don't. And they'll let you know too. So that's stuff that you can negotiate on. And I think that's it. Taxes, fees like that come with DMV, those are non-negotiable because that's just like a set, price that you have to pay no matter what. So I think that's it on that part.
We got another question here. Pros and cons of ESC coverage. I'm not familiar with that. Are you?
I think with that ESE, I think you're talking about like the warranties, I'm assuming. That's correct. The warranties are good. Depending on, some of them are expensive. You can buy them at the dealership, they sell them there. Also some of the financial institutions like Ceslock, we do sell them as well, which usually are a lot cheaper. So that is something you can buy. It is, usually the longer ones are the ones that usually you're probably gonna end up using. Just because usually after, like, most of the, it's like a 50,000 mile coverage. Most vehicles before 50 won't usually have any problems. Usually after 50,000 miles is when stuff starts to kind of, break down or something happens. So the shorter term ones, I mean, I don't really see them be that good, but you never know, because another thing too is now with all the new vehicles, they're all electric. Something electric happens, everything's gonna mess up. So, for that case, just have peace of mind. If you feel like it's not gonna add that much to your payment, might be a good idea to have it, just because if you have, especially now with all the vehicles have, everything's like electronic there now.
There's a question here. Do you still have to give a down payment if you get a pre-approved loan through your own lender?
Ooh, well, see, down, like, if you're pre-approved for a lender, that's kind of like, when you get pre-approved, you tell the lender what kind of hey, I want, I'm looking to buy a car. And then they say, okay, you can qualify for $20,000. But there's a little bit more to that when you actually go into a dealership. You're looking at the mileage of the vehicle, if it's new, used, your credit score. So all that plays a factor in it. So, and then, depending on the credit score and the year of the vehicle, and if it's new or used, then you add loan to value to that, which is another, how much is your car worth, or the amount of your car that you're trying to finance to how much it's worth, or the value of it. So that depends on those scenarios. The lower credit scores will have lower loan to values. So then you might have to have a down payment because, say instead of getting 100% loan to value, now you're only getting 80% loan to value. So now that will require you to bring the loan down to 80%. And now that, might require your down payment. So it's kind of, it depends on the person itself and the vehicle that they're buying, depending if they will have to do a down payment or not. If you have to do it on that car, you might look at a different car, maybe it has a higher value than the one you're trying to look at. So, it just depends on the vehicle itself, and then the person, if you do have to give a down payment. Hopefully I didn't confuse you guys. If you did, let me know and I can clarify.
No, not at all. Been super helpful. Any other questions here, folks? We've got one more slide that I want to share, and so if folks want to think about questions, we have a partner for financial wellness called Green Path. It's for Ceslock members. So if you're dealing with anything like struggling with debt, you need to get potentially a debt management plan created. They are a great resource. They're experts in the area. They can help make life a little bit easier on you. You can get a free consultation. So feel free to reach out to Green Path. The number's listed right there. Also, there's a bunch of brochures in the branches as well too. We still got time for a couple questions here, and it looks like there might be one coming in. So I'll make sure we keep asking them if you still got a minute or two, Javier.
Yeah, I do.
As far as purchasing from a private owner, would this change the type of loan, I believe?
No, it's the same. We're still gonna look at the year of the vehicle, the mileage of the vehicle, the credit, all that. So they're treated the same. It still be the same type of loan, so it won't be any different. It'll just be depending on the vehicle and then the individual.
Thank you. Any other questions here, folks? A lot of really good questions. Is using the Costco auto loan program worth using since it has specific dealers, I think is the question. Any comments on the Costco auto loan program?
Yeah, when I bought my vehicle last year, I tried using Costco. At the time, I didn't find a benefit to it. They say it's Costco pricing, but it wasn't really Costco pricing. It was just kind of like a thing that they say that they're gonna give you a discount. So I don't know. Now that everything's changed, it might be, you might have they might give you a better pricing. I mean, you can always, because the way it works is you call, there's a number, you go through and you call, and then they connect you to a dealership, and then the dealership will call you and give you pricing. So you can do it that way and find out, and then call on your own and say, hey, I'm looking to buy a car, this is what I'm trying to buy, and that way you can compare it. Because at the time, I don't think there was a big difference, but now there might be, I'm not sure.
Good question. Blows my mind how Costco does everything now. You can buy your groceries, buy a car, go on a vacation. You can do it all at Costco.
Yeah, they offer a lot of stuff. You're welcome, Mary.
Any other questions here, folks?
Vince, one thing that I forgot to share back in a couple slides was when you were saying, the right vehicle, choose the right vehicle. What I've done and some friends have done, and I've heard other people do is they've actually rented that vehicle they're looking at from, one of the rental companies and drove it for like a couple days.
Yeah.
That way you kind of, you really test drive it, because you'll keep it, for, say you do it for 2 days and then drive it around, on the weekend, go out of town or whatever. And that way you really kind of get a feel of, do I like this vehicle and stuff? Do you like the features? And so I've done that before. And, there's cars that I feel, oh, this is a cool car. And then I drove it. And I'm like, I don't like this car anymore. So that's something, if you have the option to do that, maybe look into doing that.
Awesome. That's a good recommendation. Very cool. Well, thank you so much, everybody, for joining. Really appreciate you giving us, let's see, I have one more question coming in. Oh, yes. Yeah, you're welcome. Thank you for joining. And again, thank you, Javier. I know I speak for everybody on the call. Thanks so much for bringing your expertise. It's really, really appreciated. I know I even learned something as well too. So I speak for everybody when I say thank you to Javier. And then thank you again, everybody, for joining. Really appreciate it. Keep an eye out for an email from me for a link to the recording. And then again, keep an eye out for some upcoming webinars through the rest of the year. We have some really fun stuff planned. So again, thank you, everybody. Really appreciate you joining, and I hope everybody has a good rest of the day. Thanks, Javier.
Thank you. You're welcome. Well, have a good day.